Hey everybody, Ace here. People always talk about multiple income streams, making money while you sleep, and having your money make more money. Well, there are three basics about money that you need to know. First, you need to be able to make money. Second, you need to be able to have your money work for you, aka have your money make you more money. And third, you need to be able to save your money. All of those things rich people already do, especially the second one. They have their money make them more money all of the time, especially on days they're not working. The average person trades in the hours of the day to get paid. But what happens when you run out of hours? Well, you're no longer going to be able to get paid. Rich people don't do that. They have their money working for them 24 hours a day. So there is no running out of hours whatsoever. They are getting paid when they're eating, when they're sleeping, when they're reading, whatever they're doing, they're always getting paid. 24 hours a day, 365 days a year, the rich are having their money work for them. Therefore, they can do whatever they want because of that. The average person uses their money so they can buy goods or products. They want to be able to eat whatever they want, buy clothes, take vacations, upgrade their computer, you name it. So we end up buying these things to use them. And in the end, they're gone, just like the money we spent on them. But the rich invest into things they know that will grow and make them more money over time. So they are able to buy those goods or products and not have to worry about at the end of the life of that product, the product and their money being gone. Now, what are these things that the rich people are investing into that is going to make their money grow? Well, it's a variety of different things. It could be from different businesses, or it could be stocks. So for example, they could be buying franchises like Popeyes or KFC, or they could be buying rental properties, duplexes, single family, multi-unit apartments, or they could be investing into stocks like Amazon, Facebook, Apple, or Netflix. All of those things are going to end up generating more money for the rich so they can have extra money to spend on those goods or products and not have to worry about that base money being gone forever. Now you might be thinking, how does the average person do this? How does the average person make their normal pile of money grow so they can have additional money to spend on things that they enjoy? Well, for starters, you need to take the money that you're making and instead of spending it on material goods, you need to invest it. You could start with something basic like the stock market and invest into companies that you personally like. For example, Procter & Gamble or Johnson & Johnson. Then, as those companies continue to grow, so will the money that you invested into those stocks. And just remember, the more money you invest, the more that your money will grow. The simple way the stock market works, for those of you who might not know, is you invest into certain companies. So what you end up doing is you buy a stock for a certain publicly traded company, and there are thousands of publicly traded companies. So for example, if you were to buy one share of Apple for $125, you now own one share of that publicly traded company, Apple, for $125. And as Apple continues to make more money, that share price will go up. Therefore, it could go from $125 to $135. You then just made $10 on that one share, which then you could sell that one share for $135 and make a $10 profit, therefore making your money grow instead of spending it on an Apple product. Now, I would like to note that the stock market does not always go up. You cannot pick a stock and invest into a company and guarantee that it's going to go up and you will make money. I am not a financial advisor, but if you want to get into the stock market, you can definitely reach out. There are a lot of financial advisors out there that can walk you through how to do that. Now, there are always ways that you can lower your risk when investing in the stock market. And the best way to do this is to educate yourself. The more you learn, the less risk that you're taking on. And as Warren Buffett, who is one of the greatest investors in American history, has always said, risk comes with not knowing what you're doing. Now, there are multiple ways you can invest into the stock market, and there are a variety of different portfolios you can have. You could have a dividend portfolio, you could have a growth portfolio, you could have a speculative stock portfolio, an international portfolio. There's a variety of different ways you can invest into the stock market. Rich people have enough money to have multiple different portfolios. They might have a dividend portfolio where they're making thousands of dollars per quarter and a strong growth portfolio where their base amount of money is growing with the stock market. Don't get discouraged because you too can have just as strong as portfolios as the rich people do. But you have to start sooner rather than later in life. The sooner you start in life, the more that the magic of compound interest will actually work for you and you can start to become rich. You don't just have to invest into the stock market. You could own real estate. You could become a franchise owner. I personally think the stock market is just one of the easier ways to have your money make you more money. Because with real estate, if you're a landlord, then you have to screen tenants, fix the property up, and do all the maintenance that comes with that. Or if you have a company do it for you, then you're just cutting out some of your profits and paying that company to do it. Yes, it might be a little bit less of a headache, but you're not making as much money as you could. Now, on the other hand, if you're a franchise owner, you're gonna have to deal with the day-to-days to that business. Hiring employees, getting your inventory, making sure everything is working for that franchise. So it's a give and a take depending on what you wanna choose to do. The beautiful thing is there's a lot of options out there for you. It's not this cut and dry, you have to do the stock market, you have to invest into real estate, you gotta do both. You don't. There's a path open for everyone. You just have to figure out what works for you and choose that path. Now, the last thing I want to mention is about the economy. You need to know that the economy fluctuates. The economy will go up and it will go down, and you need to be able to hold through and ride through those waves. Just remember, whatever you're doing, real estate, stock market, owning a franchise, whatever option that you choose to do, that you're not buying in at the peak and then riding it through the downturn. You want to make sure that you buy at the low and sell at the high. Just look at the markets you're going to get into and make sure you're buying at the right time. Right now at the stock market, we're at all-time highs. In the real estate market, we're at all-time highs. Now, am I recommending to do one or the other? Absolutely not. You got to figure out what works best for you and choose that. But they are at all-time highs, so that might make you think, maybe I wait for a correction or a little bit of a downturn before I hop in and just acquire a little bit more money so you can jump in and have that pile of money grow and make you a lot more money. But on the contrary, the longer you hold out, you could be missing out on potential gains. Again, you got to make that choice for you. I know myself, I'm constantly putting it into the stock market and having my money grow and make me more money. So again, I'll say, make sure you pay attention to where the markets are so when you buy in, you don't screw yourself later. If you liked this video or learned anything, please just tap that thumbs up button for me and subscribe below for more content. And I hope to see you in the next video.